Welcome back. You're watching the Commodity Trade. Let's get in Abhishek Goenka, Founder and CEO of India Forex Advisors. Abhishek, your near to medium-term view on the rupee. We've slipped a little today again. I think the last time we spoke to you, you said that we are likely probably to be in a range which will be capped by around 65.5 or maybe 66 at best.
Yeah, so I think there has been some decent developments happening in international markets, especially on the crude prices. As we know that a 10%, $10 increase in crude prices increases India's PPI by around 0.7%. And also widens our current account deficit by around 0.4%. Accordingly, the market is pricing in inflation concerns. So that's one point. Second is, we are seeing some IPO money outflows, which is also reflecting on the rupee. The NDF markets are showing 2 paisa plus, so that shows that some money is going out. Plus, in November, after January, I think the first time we have seen outflows in the debt market, because the 10-year yield has been going up because of inflation concerns and fiscal deficit concerns, because of which we are seeing outflows in the 10-year. The FPI is unwinding the debt, which is normally 10-year debt. And lastly, I think the fiscal deficit concerns are coming in the market because of GST concerns and the demonetization problem. So I think across all these factors are together putting a pressure on the rupee. And I think because of which 65, 40, 50 levels, which is very crucial now. I mean, if this breaks, then definitely we can assume that we can see a percentage of 1.5% higher in the US dollar against the rupee. Until the time 65, 40, 50 stays, I think it's going to be in the band. So I think it's important that we carefully watch the market. Today, I think a lot of exporters have come in the market and started selling. But I think on a break of 65, 50, I think importers will start getting panicky in the market.
So if we breach 65, 40, what's the level on the downside that you are probably seeing?
We might be seeing at least, so 65, 80, 90 was the last high. So I think if this time the market breaks 65, 50, I think possibly 66 plus is what is our expectation. So I think today the market's open with a gap. And tomorrow again, if it's holding above 65, 40, then I think it gets confirmed and we could see a higher rupee.
And on the higher side, to what level are you seeing?
I think 65 half should be good, where rupee could be seen, provided these numbers escalate further and the US dollar internationally also gets stronger. I mean, the 10-year, which is at 2.4, starts breaking 2.5 and 2.6 on some tax reform, etc. Then I think we get benefit for the US from both sides, both domestically and internationally. Then I think it can give you a momentum above 66 level.
Inflation numbers are to be reported in the evening, then WPI tomorrow. So the yield has already gone to 6.97. Will we breach 7 maybe today or in a couple of sessions?
Yeah, I think possibly, because I think 7 is just a psychological number. And already the outflows have started happening in the debt. And inflation, I think, as I said, everybody is expecting the inflation to go up because of crude. So I think the yield will go up after the numbers.
Are you working with some estimate? With the Reuters estimate says around 3.46% compared to 3.28 in the last month.
Yeah, so we don't have an exact estimate. I mean, we don't calculate estimates. But the feeling that we get is definitely we should see a higher inflation number.
Right. Abhishek, what do you feel about the dollar index and, thereby what could happen to the euro as well? Because now we are seeing gradually the tightening that will come through the dollar index. I think the recent low that it scaled was almost 91. Now we are at 94.5. I think the last time you said that there could be some more strength that would come on the dollar index. If there's a concrete tax plan that is announced, probably a little more. So do you see the euro, the sterling, the yen, all these weakening a little compared to the dollar?
Yeah, I think as of now it's kind of stuck in a range. But the broad trend is strong for the US dollar. So I think we should see a level of 95, half 96 in the US dollar index. And euro might just go up to 1.17, 1.18 against the US dollar. but then we'll start coming towards 1.14 levels in the next 2-3 months or before that. And similarly, so yen is a different model. I mean, we just can't say the yen to go up because the US dollar gets strong, because a lot of risk off sentiments also play in. In fact, the yen is not going up above 114.50 from a long time. It's kind of stuck in the range between 113 and 114.50. But broadly, because the QE is on there, I think yen should go up, and every dip is an opportunity to go long dollar yen pair. And regards to sterling, I think it's kind of a seesaw between information which is becoming on the Brexit. So I think it's difficult to take a view on that. But till the time we have a hawkish stance from Bank of England, I would not be looking at a very low pound sterling. I think 1.27, 1.28 on the downside. Possibly on the higher side could be 1.3435 levels, because the interest rate expectation is only up from here. So I don't see any reason why the sterling should go down a lot.
Right, and from other Asian currencies, what would your pick be? I mean, the South Korean won or the Malaysian ringgit, Chinese yuan?
So yuan is strong. The other Asian currencies kind of is going against the US dollar as of now. So I think everybody is following a pattern. So I think I would not go and buy any Asian currency as of now. I think it remains sell on any rally.
Fair point, Abhishek. We're going to leave it at that, but thank you so much for joining in with a view on the medium-term view on the Indian rupee, the dollar-rupee cross, and also what you feel about the bond yield, given that we'll be expecting inflation numbers in the evening today, CPI and WPI tomorrow, and also what you broadly feel about global currencies, including the dollar index and other Asian currencies as well. We've completely run out of time on this edition of the Commodity Trade. News and updates continue on the other side. Thank you for watching.